Hey guys, it's Crossroads here. Today I am talking about Palantir and specifically noting that I am selling Palantir shares. This is not clickbait. I'm actually doing this, and it's not all of my shares. It's about 20 to 25% of my position, depending on the price that we land at. It'd probably be about 23 and some change at this point. I wanted to talk about why I'm doing that, but even more importantly, in the second part of this, why I'm keeping so much of my Palantir in light of the reasons why I'm selling it. So, first part of it, let's look at why I'm selling it. And it has nothing to do with the company. Palantir is a unique investment. It's one that I went very heavy into in 2022. I increased my small position from 2021 all the way up to 90% of my portfolio. And boy, did that work out. Of course, I was buying massively. The largest buy of mine was about $6.20. And it's up a little bit more than that right now. So my portfolio is looking pretty good thanks to Palantir and the hard work that they put in there. And I even predicted at that time when Palantir was trading relatively low that it could 5x relatively quickly with the AI wave that was coming, and sure enough, did arrive. But at this point, Palantir, its valuation has gone up to the point where I would say it is quite extreme. So this is a blog post from Hamin Bal. He works for Altimeter. I might be mispronouncing his name, but he's an incredible follow. He has a Substack, and of course, you can follow him on X as well. He tracks largely SaaS companies, software as a service companies, and Palantir is one of those. Now, what they do out of all these companies is different. No, it doesn't compete with Snowflake, or at least not very much, or Datadog, or ServiceNow. There's a tiny bit of overlap, but it can be useful to look at multiples in this industry and see where Palantir stands. And so we have here his enterprise value over the next 12 months. Revenue, the expectations anyway for Palantir, it's at 46.3 times. And you can see it stands quite a bit higher than the median, than the average, and all of these other companies, some which I don't think much of, and some which I think are fantastic companies. And every single one of these multiples, it's not always the highest, but it's quite expensive. And of course, Palantir has a lot of things going for it. You know, it's an 81% gross margin is fantastic. A fantastic operating margin, free cash flow margin. I mean, there's a reason why Palantir is going up, and it's not hype, it's not speculation. They have real results and a fantastic strategy as well. Now, there's a couple other charts I want us to look at too. And this is kind of putting things in bar chart form. So the same information, enterprise value over the next 12 months of revenue. By the way, the expectations here is that Palantir grows at a 25% rate. I think Palantir will come closer to 35% growth over this next year, maybe even hitting 40% at least once over the next 4 or 5 quarters. But even with those assumptions, you would see this 46 times multiple being egregiously high compared to these other companies, many of which I think are good. Palantir is unique. It's a unicorn, yes, but everything does have a value. So if we look at growth adjusted enterprise value over the next 12 months, we can see Palantir is also quite high here. Not as high as Dropbox or Kaltura, but it's 1.8x versus you can see where this median multiple is at 0.5x. And so it's extreme, but that also doesn't mean it's not worth purchasing. And you can, of course, see enterprise value over the next 12 months. Free cash flow. Palantir has quite a bit of free cash flow. Keep in mind, they also have a lot of stock-based compensation, even relatively speaking, compared to software as a service companies. Though, frankly, the employees there, they absolutely deserve it, including the grants that they're getting from this last quarter, the stock rocketing up very high. So 116 times is where Palantir trades with that. And then the last chart that I'll show you from Hamin is this next 12 months revenue growth versus the next 12 months revenue multiple. You can see this nice line here that shows the slope. It shows a trajectory, that there is a correlation there, certainly. And which name stands out the most? Well, it's this one right here. If you can't see that, that's Palantir. It's a bit extreme at this point. Now, if Palantir wasn't about 50% of my portfolio, maybe I wouldn't take gains here. But with it being such a large percent of my portfolio, now, even though I've not been buying Palantir in quite some time, I think it's prudent to take some gains at this point. I've taken some gains off of Leaps before in the run up, both last year and the year before. But this is my first time selling shares. So you might say, well, Roy, why, given the extreme valuation or the extreme price of Palantir, rather, and it's a very expensive name, why are you still holding basically 75% of your position after today? Well, the reason why is I think that Palantir is unique. They're uniquely positioned to really take advantage of this AI wave, which they've been doing. It's one of the reasons why their growth has accelerated to 30%. It's one of those reasons why I think that they'll grow somewhere around 35% over this year. They have a very, very sticky product. And there's no company out there that does what Palantir does. There is some overlap. You can maybe piecemeal some things together, but there's only one Palantir. It's unique. And that's one of the reasons why it's getting this valuation. This was part of that strategy that Alex Karp had, certainly when AIP came out. And he said, hey, we're going to actually position ourselves to take the whole market. And we're seeing customer after customer, of course, double down and triple down on what they're using Palantir for and with. You can see them beginning to use AIP and Foundry across many segments of their enterprise. We've seen net dollar retention spike up to 118%. I think that will probably continue to climb as AIP has continued to be monetized and as more people are renewing their contracts. They're in a great season for that. We've also seen a lot of government revenue as well, which is incredibly sticky for Palantir. So expect that growth to continue. I don't think this is going to be an aberration. I don't think this is even going to be that cyclical. Of course, the stock is one thing, the company is quite another. But I think over the next 10 years, even if I was buying today instead of selling, I don't think I'd be too sad about buying Palantir. This to me is a $1 trillion company. It's going to take years. It's going to take maybe a decade to see that valuation. And you can look at where they are right now and just figure out if you're comfortable with that. But there is some risk here at this price versus when I was buying it heavily in the 5s, 6s, and 7s. Very little in the 5s, to be honest, but I did get a few shares. There was very little downside risk, even though at that point they were not profitable. So I want to show you a couple other figures too, right quick. So Palantir, this is from their slide deck. We'll see, of course, their earnings here in a few weeks. But we can see, especially with U.S. commercial, 54% year over year revenue growth. Customer count is 77%. They are moving down market and getting smaller enterprises as well. Remaining deal value looks very good, and they're closing just a lot of deals. And so fantastic 5x over the last 3 years for U.S. commercial count. We're seeing net income continue to climb. Doesn't matter. The interest rates are going lower. GAAP operating net income is also looking good. And rule of 40, I know a lot of companies struggle with this. No names, but Palantir is not one of those. 68% on the rule of 40. This is something that they've been stressing over the last 4 or 5 quarters. They're absolutely killing it. Their operating margins are fantastic. U.S. revenue growth, including U.S. government, is continuing to climb just massively, even while international revenue lags. So they have a fantastic opportunity before them as a company. I expect them to actually continue to accelerate. And by the way, they are likely not done creating products, even though AIP is incredibly adaptive. Apollo is great. Gotham is great. Foundry is excellent. This is a company that has just a culture of innovation and differentiation. They have fantastic leadership as well. And I wouldn't be surprised if over the next few years, there's a number of new products that they launch, which continue to help contribute to their growth. So I am not getting out of Palantir entirely. I'm selling 20 to 25% of my shares, taking a profit with that, thinking Palantir, and it will still be by far my largest possession. Why? Because it's my largest conviction. So thank you for watching and tuning in. I can't wait to see those Q4 earnings for Palantir and see if we're right that they continue to accelerate. Market is giving them a premium for now, and it may for quite some time. Let me know what you think in the comments. Have you taken some gains if you're a Palantir shareholder? Are you looking for a greater dip to possibly buy in or buy back some shares? Or are you just sitting on the sidelines and watching this play out? It's entertaining either way. As always, thank you for watching, commenting, and subscribing. Happy investing.